What's up, everybody? Welcome back to Markets with Trust Issues. I'm your host, Max Pitts from Investor Central Club, and today's mood is I'm optimistic, but I brought a lawyer. We've got upside being rented, downside insured, and enough hedges to landscape Versailles. Let's unpack the why, not just the what. So, the market's love language, time frame mismatch. Big investors are saying two things at once. I want exposure, they're buying long dated calls, and I refuse to be embarrassed, they're buying near dated puts. What that tells us, small caps, IWM, a large June 2026 call on the 220 line, belief that Main Street participates eventually. The same tape shows near-term IWM puts, insurance for the messy bits between now and eventually. The interpretation, a time frame split. PMs want to own the recovery over years, but they won't trust the next few weeks. The next thing is cross-asset clue, rate soft and credit cautious. Why should you care? Equities don't move in a vacuum. TLT, aka Treasury calls, a quiet bet that yields drift lower. HYG, high yield credit puts, growth slows or spreads widen. A polite way to say credit could wobble here. The bottom line is the soft landing story lives, but nobody's leaving the exits blocked. Now we have AI chips, conviction with a parachute. NVIDIA is the poster child. You've got out in time upside calls, belief in the secular AI run paired with productive puts, respective for volatility and lofty multiples. Now, why pros do this? They want upside if AI keeps compounding, and they cap drama if we get a macro shock, export headline, or simply valuation math. The key takeaway with this is the AI trade isn't dead, it's just wearing a harness right now. We also have some mega cap optionality, quality as a call option here. Apple call overlays into late 2025 say, we like cash flows, buybacks, and services, but we like defined risk even more. And a teaching moment here is big liquid names are the easiest places to express optional upside without re-risking the whole portfolio here. We also are seeing an energy transition smackdown. Solar's up, micro-nukes are down. Today's tape basically voted. Solar, FSLR, call only tone. Classic when duration eases and utility scale projects pencil. And then nuclear is light with SMR. Put hedging, which is a great narrative. Choppy execution. The lesson here is theme rotation shows up in options before headlines. Follow the clusters, not the tweets. And then we have hope with a prenup. You can see the ETF dance. ETH call interest on one wrapper, puts on another. Basis hedge / mechanics. Equity beta satellites, think Wolf and Hood, get upside punts as well. The meaning risk appetite is alive, but even crypto tourists brought a life jacket. Now, what dealers might be feeling is where you see repeated strikes like IWM downside shelves or popular SPY protection, dealers often get short gamma there. In English, on red days, those strikes can pull price, aka gravity wells. On green days, heavy call lines can grease rallies, aka gamma assists there. Now, here's some actionable takeaways. You don't need to predict, you just need to know which strikes steer intraday tape. Now, two afternoon paths. If we stay green, expect Apple and NVIDIA call lanes in the IWM 2026 call to soft support, not a melt up, a glide. Solar, it tends to grind higher as open interest builds, not explode. But if we turn red, watch IWM put shelves, think 220, 200 region. And popular SPY protection act like magnets. Tesla and SMR typically underperform on risk off, already hedged for a reason. And vol products perk up if we get a headline shove. So how to use this without burning your face off in the kitchen? Pick a time frame that matches the positioning. Want the long story? Shadow the long dated call themes. IWM recovery, Apple, NVIDIA. Think those names. Nervous about today? Respect the near dated put shelves. Don't buy IV at the club. If a contract's volume is already partying, wait for the hangover or structure spreads. And a sanity check. What's the catalyst? Is there repeat flow or just one loud trade? Does your stop make sense before you press buy? Now, Quick watch list: IWM, recovery calls versus near term insurance. SPY, we're seeing protection magnets. NVIDIA and AMD, conviction with parachutes. Apple, late 2025 optionality. Tesla is seatbelted Colt, and FSLR is a theme accumulation. HYG and TLT are macro tells, and ETH wrappers slash hood slash wolf are crypto tone. Today's vibe is risk on with chaperones. You don't have to marry the rally, rent it responsibly. This is not financial advice. This is today's read from your Investor Central Club dashboards. Flow shows where size sits, not who's right. Keep your stops and your sarcasm. I'm Max Pitts. This is Investor Central Club. I'll see you in the next one.